For today's Bart Chart, it's the Russian market crisis over as Putin gears up for his annual call-in show today. It's a question that's very important to the Russian president. Let's start with the ruble, the Russian currency. On Wednesday, it continued its recent resurgence, strengthening below 50 versus the dollar. For the first time since November, a far cry from the 68 closing price or the 79 intraday level reached on December the 16th. See that yellow circle, the white circle just there? That was a day after the central bank surprised the world with a 650 basis point interest rate hike to 17%. The ruble has gone from the worst performing major currency against the dollar last year, that's out of 31 nations, with a drop of 46%, to the best performer in 2015 with a 22% gain. Now, Russia's local currency bonds are telling the same story. This is the second chart. This is the Bloomberg Russia Local Sovereign Bond Index. It's a gauge of ruble-denominated bonds issued by the government. Now, in the last 12 months, the index is one of the worst emerging market sovereign indices, with a return of just 2.2%. The trough, the yellow circle right there, once again, December the 16th, when the index fell to an all-time low after that surprise Russian rate hike. Now, the trend has clearly improved since then. Year to date, Russia tops the emerging market local sovereign bonds table with a return of 19%. Let's finish with stocks. The third chart is the RTS index, one of two equity benchmarks in Russia. This one's calculated in dollars. The MISEX, of course, is calculated in rubles. In 2014, it was the worst performing global stock market out of the 93 we track at Bloomberg, with a slide of 45%. This year, look at the trend, how things have improved. It's the fourth best performer with a gain of 33%. Its trough, once again last year, the green circle, December the 16th, that surprise, of course, that rate hike from the Russian central bank. That day it sunk by 12%, the lowest since 2009. So you'd have to say, certainly from a market perspective, the evidence does suggest that the worst of the market crisis is over, at least from now. Putin has, in large part, the price of oil to thank for that. Brent crude, which of course is the oil grade traders use to price Russia's main export blend, has rallied 35% from its low in January. Still, the economy is likely to enter its first recession in 6 years this quarter, with consumers very much bearing the brunt of the fall. It won't all be plain sailing for Putin today in the annual call-in show.